Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of corporate filings. And today we've got a real doozy from Ton Strategy Company that might have their stock price doing a little dance. So what is the big news? Well, it seems Ton Strategy Company might have danced a bit too close to the line with Nasdaq's rules, and now they're getting a stern talking. We're going to unpack what that means for the company and its investors. Before we dive in, if you like your corporate news served straight up and easy to understand, make sure you hit that subscribe button. And for more real-time discussions and insights, join our Discord community. The link is in the description below. Alright, let's get straight to it. Ton Strategy Company has filed a Form 8K, which is basically a report for big, important events that happen between their regular financial reports. Think of it as a company's way of shouting, hey, something significant just occurred. And when a company files an 8K, it is usually because something demanded immediate attention. This report is essentially telling the world about a problem they're refacing with keeping their stock listed on the Nasdaq stock exchange. The core issue here is that the Nasdaq staff, which is like the club bouncer for publicly traded companies, sent Ton Strategy Company a letter. This letter basically says, Houston, we have a problem. You didn't follow our rules. The date of this notice was the 9th of October 2025, and the specific rule they allegedly broke. It is about getting permission, specifically shareholder approval, before making certain big stock issuances. It seems Ton Strategy Company issued a bunch of new shares and warrants back in August of 2025 as part of something called a PIPE financing. PIPE stands for Private Investment in Public Equity, and it is a way for companies to raise money from big investors. Nasdaq S Rule 5635B, to be exact, says that if these new shares significantly change who owns and controls the company, you need the shareholders. Okay, first, the Nasdaq staff believes that by issuing these shares in the PIPE deal, Ton Strategy Company essentially triggered a change of control, and they failed to get that crucial shareholder vote beforehand. What makes Nasdaq think there was a change of control? The report mentions that around the same time the shares were issued, there were also big shifts in the company's leadership. A new executive chairman came on board. A new long-term advisory agreement was signed with an entity tied to this new chairman. And this chairman S Group ended up buying a significant chunk of stock, around 19.99%, which is super close to the 20% mark that often triggers specific reporting requirements. Now, the company's side of the story, based on the advice they got from their own legal and financial advisors at the time, is that they believed they were following all the rules. They thought they were compliant when they closed this PIPE deal. This is where things get tricky in corporate law and stock exchange rules, as there can be different interpretations. The good news, if you can call it that, is this letter from Nasdaq doesn't mean the company is kicked off the exchange tomorrow. They're not delisted yet. However, they are on notice. Nasdaq has given Ton Strategy Company 45 days to come up with a plan to prove they can meet the listing requirements. If Nasdaq accepts this plan, they might even give the company an extension of 180 days to actually fix the problem. But, and this is a big but, there is no guarantee Nasdaq will accept their plan or that the company can actually get back on track. This no assurance clause is pretty standard corporate speak for this is a serious situation and we have no crystal ball here. It just means this is a significant hurdle, and investors should be aware that their stock could be delisted if the company can't work this out. Now let's touch on the forward-looking statements section. This is basically their legal disclaimer, telling everyone that the future is uncertain. They're saying that while they intend to work with Nasdaq and submit a plan, things could go wrong, and the actual results might be very different from what they hoped. They mention risks like Nasdaq not accepting their plan or the company not being able to meet the listing rules. They also point to their previous filings for more details on potential problems. It's crucial to understand that these statements are about intentions and hopes, not guarantees. And finally, we have the signature. This is the formal sign off by a company executive. In this case, Veronica Capestina, the Chief Executive Officer, confirming that the information in this report is accurate to the best of her knowledge. The date on this signature is the 10th of October 2025, just a day after the report itself was dated. So what is my take on all of this? Ton Strategy Company finds itself in a precarious position. The core issue is a potential violation of Nasdaq's shareholder approval rules tied to a recent stock issuance. While they claim they followed advice, Nasdaq's stance is clear, and the consequences could be severe, including delisting. The fact that this happened alongside significant leadership changes and a large stock acquisition by the new executive chairman, S Group does add another layer of complexity, and perhaps signals a shift in the company's strategic direction or ownership structure. The key risk here is obvious: delisting from Nasdaq. This would make it much harder for investors to buy and sell the company, S stock, and would significantly reduce its visibility and access to capital markets. It's a real black eye for a company. The opportunity, however, lies in their stated intention to work with Nasdaq and present a compliance plan. If they can successfully navigate this challenge, it could demonstrate resilience and effective corporate governance under pressure. In conclusion, Ton Strategy Company is facing a serious regulatory challenge. Investors should closely monitor their interactions with Nasdaq and any updates on the compliance plan. The company's ability to resolve this quickly and effectively will be a major determinant of its future prospects. It is a situation that requires careful watching. Alright, that is our breakdown of Ton Strategy Company, S latest filing. What is your take on these numbers and what they signal for the company, S future? Do you think they will regain compliance? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.